Alright, there we go. Perfect. So we're going to try to keep it a little bit short today. I got an unexpected meeting right around market open, but what we'll do is restart the session again if we end up getting some better movements right after that. So around maybe in potentially an hour, I'm going to hop off on around 6:45, so 15 minutes after the stock exchange opens up, and then we're going to hop back to the same exact link that you guys have here for Zoom. I'll make the announcement on school. Hope that's okay. Sorry about that.
That's all good. No worries, great.
Awesome. Alright, let's start again. So we got PPI came out a lot higher than what we were forecasting in the previous as well. Core PPI, which is excluding food and energy, has also come out a lot higher than what we were expecting, which means at this point, no expectation of any sort of rate cuts. Instead, in the market update yesterday, we talked about how the expectation now, there's a 30% prediction from the traders in the market that we're going to get those rate hikes by December. There's a 70% expectation or prediction that we're going to get rate hikes for sure by April next year. Trump has just landed in Beijing for his meeting with the Chinese president. He also has a bunch of CEOs, as we were just talking, joining him as well. So these are all the people who have pretty much joined him now on his trip. But did you guys get a chance to watch the market update yesterday? Any questions about that before I just start?
Yeah, I watched it, man. All good. It was very well explained.
Okay.
It was a bit much.
Very in depth. Yeah, very good.
Yeah.
Perfect.
You explained it very well, BJ.
Yeah.
Perfect, thank you. But yeah, so adding on to that, now we're going to see that the pressure is going to start to increase. He's going to try to press the Chinese president over China's relationship with the Islamic Republic, coming from the U.S. Treasury that was sanctioned those entities and individuals earlier this week to kind of block the oil that's being purchased by the Chinese firms, the Iranian oil. Then we also have him pressurizing Iran to basically try to do a deal. We also had CPI that increase, which now has put a little bit more domestic pressure on Trump to pretty much get it going and try to get a resolution. Because if he doesn't and the war just pretty much drags out at this point, then we are risking a lot more economic damage just domestically in the US. Now with PPI increase and the big jump that we have gotten, and we had, what was the 2022? The most since 2022 on energy cost. That's putting even further pressure on him because PPI then gets trickled down over to the retail side. The retail side is obviously going to jump up the prices as they're selling it to the consumers. And we saw yesterday with the CPI that now in the beginning of the year and even towards the end of last year, the expectation was that the consumer prices were increasing due to the high energy prices. Like that was the catalyst that was kind of skewing the data. But yesterday's CPI showed us that inflation is now trickling onto all other parts of the economy. So the consumers are paying higher for like food, they're paying higher for shelter, they're paying rent and all that, they're paying higher for transportation. So basically all other parts now, the energy prices are not the only, or it's not the only factor that's skewing the data point. Make sense about that? Any other questions about this before we move on?
That sounds great to me.
Perfect. The key thing to understand here is that we're not sitting at a peak inflation just yet. Now this is kind of the part where it's starting to build up higher and higher and higher. Alright, so now we're still in the 11th week of the US and Iran war. The summit, we just talked about that as well. We also have the Fed chair nomination vote, which basically already happened yesterday, but they had to do like a 30-hour procedural wait. So today, we're hoping to get Fed Chair Warsh's first public statement. Like I said in the market update yesterday, the actual release of them saying like, hey, this is our new Fed chair is not going to be the actual trade. The trade is going to be his statements around inflation, about what is the Fed. He said that he's going to bring in some structural changes. So what are those structural changes? And also he has already made it very clear that we're not going to get those press conferences like Powell used to do right after the interest rate release. So instead, he wants to do more of the data dependency. We're expecting as a market that there's going to be a lot more surprises, not much of that forward guidance that Powell used to give us during those press conferences, where he would just tell us exactly this is what we're looking at. This is, the press would ask them, the reporters would ask him a couple of different scenarios. Okay, what if this happens? What is the Fed going to do then, etc. And he wouldn't obviously like give us outright the answers, but he would give us the hints. So we knew exactly what we were looking at, the type of scenarios according to the data points, piecing things together to understand what's the full picture, and expecting what the Fed is going to do. We're not going to get much of that from Warsh. So that's another thing that we want to watch out for. Awesome. So that is the quick macro update. We are going to redo our levels here. So starting off with US 30. We've got 49,800. We have got, let's go back up to the weekly just to confirm the bottom wick rejection, which is 49,300. Drop down to the daily. That is the bottom wick from yesterday. What I'm going to do here is create a zone right underneath this daily support. If we see that price continues to break below that, then we're going to look for those sells from same exact trade from yesterday. 49,500 area, bring it down to 49,300. On the daily, this is the core consolidation, so we're just looking for a zone-to-zone trade. If price does not continue breaking below this level, which is what we're expecting is going to happen at the market open, then we don't have a trade. I would not be looking for a trade in between here. It looks like a pretty big range. You're sitting at 49,600 almost going up to 800. That could be a 200-point move. It's just that once you tap into that consolidation, all of that is just volatility, and you're risking just wick rejections being made and things like that. Alright, let's come over to the hourly time frame. Just analyzing what's happening here. Yesterday, we had this entire sell-off that happened, and then immediately after that, we saw a bit of a corrective move. Price is pushing back up, bullish, right into that consolidation area, which happened all of Asian session going into London session as well, anticipating what's going to happen with PPI. And then we start to see this entire push down, leading up, of course, because we were already expecting that PPI was going to increase, both the month over month and the core PPI. We got the release, price reacted not so much, but it did push down into the support areas here. Now we're just getting a bit of a reactive move. If I start to narrow down onto the zone, the exact area of where I want to see price reacting for a further sell-off, I'm going to drop down to the 30 and the 15. We start to consolidate out right into the previous consolidation support areas too, before this sell-off that happened right when PPI was released. Held onto a support and retraced right back up. So what I'm looking for here is price to hold on to a resistance. That way it gets to correct the sell that happened since London session here, correct some of that movement, give buyers enough opportunity to push price a little bit higher, hold on to a resistance here. It should not really be breaking above that, and then continue that sell off. If we end up getting price holding onto a resistance here, and then on the 15-minute, let's say on the 30-minute time frame, we have 9 minutes until the stock exchange open, then we can continue looking for those sell opportunities, potentially even catch it from a higher position. But let's say if price pushes up in the next 9 minutes, 8 minutes, whatever, it pushes up higher here on the 30-minute or even on the 15, where we're breaking the previous highs. That tells me that we don't have enough sellers in the market, or we need to tap into some liquidity areas, which in this case would be this massive consolidation right above the zone. So essentially, you're looking for a resistance to be held here, and then as price breaks these lows, look for those sells down here, hold on to your stop loss right up top there. First target being 49,500, and then a continuation down. Everything down here is going to be free money. If you get another break and retest formation, you can scale in there. So then the way I would break this up is 1% risk right here, another 1% here. The total that we ever do is going to be 2%, unless you're certain about a potential move, then you do 3%. 3% is max risk. We don't go anything higher than that. But let's say if price continues pushing higher and I end up getting, let's say, another wick rejection in the next 7 minutes or so, right up top here, then I want to see some candle closures, and I would not be looking for an impulse entry at that point. I want to see actual those break and retest formations, at least on the 15-minute or on the 5-minute, since that is the volume time frame that we usually trade. It's a high volume time. We had a ton of fundamentals come out already with the confirmed meeting. We've had CEOs joining Trump on his trip to China. We just had PPI. Today we also have Fed Chair headlines that are basically going to be coming out, his announcement, all that stuff. So today's going to be a very heavy day. That's why I'm ready to wait for a break and retest formation instead of taking a impulse trade on just the 5-minute time frame and just looking for straight drops. Does that make sense? Any questions?
No, that makes
Sounds good to me.
Awesome. Let's go ahead and move over to the commodities, and then we'll come back over to the currencies. Alright, we've got a nice push this week already. Come back, revisit the previous highs of last week. Broke that just a little bit, but not too much. And then support down here. Let's come on to the daily time frame. Quite similar to US 30, you have daily time frame consolidating right around here. So overall, we are still in this downtrend with gold. We pushed up earlier into the year, tapping into 5,600, massive top wick rejection. After that, we've had a lot of seller's pressure for this specific pair due to the US dollar strength that we have been seeing. Then you start to see another push back up, ended up creating a lower high formation, lower low, massive wick rejection to the downside. Back in March, consolidated for a couple of weeks before we finally got another retracement back up to revisit 4,800 in early April last month. And then another lower high formation, push back down. We have not created lower lows here at all, but we ended up consolidating just for another lower high formation, it seems like. So same thing with US 30 and gold. I'm going to wait for price to break its own low and then continue pushing. That way I have a much cleaner trade to bring gold down into 46.40 for any sell opportunities. For any buys, we have a much bigger range here to look for buys compared to US 30. US 30 it's about less than 200 points basically that you would be catching to the upside. But with gold, you have a much bigger range. So if price continues breaking above this resistance area right here, which is the previous support, if you zoom out, you see support formations right around here as well. So if you get out of this core consolidation, price breaks the previous 4-hour highs and then continues pushing, then we are going to look for those buy opportunities to the upside. Drop down to the 1-hour time frame, identify what are going to be your potential partial areas. In this case, you can look for any impulse entries as long as you get candle closures above this 47.10 area. Give me 1 second. Okay. Above that 47.110 area, you want a candle closure here. You want the next candle to give you a bottom wick rejection. Right into that area, continue breaking the previous highs. My only area of concern here, as I'm waiting for a potential entry, is just to see enough volume that we're not really going to just create a top wick here and then push right back down. What that basically means is that if you look at the previous candles that failed to continue pushing bullish, it was because as soon as price established a support, even here and here, it did not kick out the sellers. It started right here and did not even create a bottom wick. Continued pushing, This is the only candle that really had a top wick and a bottom wick here, which gave the momentum for the next 1 hour candle to continue pushing bullish, which closed at the top of its range and no bottom wick, no liquidity wick whatsoever. After that, the next couple of hourly candles failed to continue pushing bullish. They just did not have enough liquidity. That's where you saw that price retrace, and again, it's currently holding on to the same area as support. If we're looking at this situation here, same thing, no bottom wick on this candle, no bottom wick on this candle, did not even kick out sellers. The next candle did, which gave momentum for the following candle, barely a bottom wick, and then continued pushing, came back overall into the same average area, tried to close above that. The next candle brought it right back down, and that's why the support formation here was so important. That's the type of scenario that we're looking at here as well. If this candle, for example, the current one, there's no bottom wick. If it continues pushing, I would expect that there's going to be another wick rejection here, and price is going to start looking for either a retracement or it's going to consolidate here as well, like it did here a little bit, before it continues pushing to the upside. So it's very important that once you just understand basic candlestick anatomy and you understand these consolidation areas and what the market is doing, especially from higher time frames, then you understand what you're looking for on lower time frames, on the 15 minute, on the 30 minute, and the type of entries that you're going to be looking for. In a situation like this, it would be very easy for people to think that they're missing out on a trade, get FOMO, end up buying at the high, and then get stopped out. Same exact situation here where you end up buying right up top here, thinking that price is going to continue pushing, end up getting FOMO, just to get stuck in a consolidation and end up getting stopped out. So it's very important to understand exactly what the market is doing. The candles are telling you everything. In this case, this entire zone here is going to be our no trade range. We're going to wait for price to break above, either give us a bottom wick rejection or give us a break and retest formation to continue pushing back up bullish. For any sells, same exact thing to the downside. If we don't end up getting a break and retest formation down here, then we're only looking for a very quick scalp to bring it down into 46.50 and then bring it down even further down to 46.40 area. That's pretty much it. Any questions on gold?
Nothing here, VJ.
All right. We have our person who is trading silver, so let's go ahead and break that down for her too. So what I'm going to do is map out that top wick rejection here instead of the current candle's top wick. Or actually, let's bring it down to the top wick. What I'll end up doing is creating a zone up top there, just so we can see clearly what the market is doing at these levels. So that is 87.93 for silver. We have our weekly candle, no bottom wick whatsoever, have not kicked out any sort of sellers here since the start of the week. Drop down to the daily. So on the daily time frame, same exact thing as silver, where you have that bit of a downtrend, where you had that massive push up early 2026, and then after that a retracement, came back down, held onto a support right into this previous consolidation area here, and then overall just got stuck in this area until we pushed back up bullish. Same thing here, did not really sustain any highs, came back in general into this previous consolidation, rejected into that, held onto a resistance, pull back down, another lower high formation before a big sell-off to come back in general into the same exact consolidation support area, and then we got a bit of a retracement. That's kind of the area that we have rejected off of early this month as well, just to push back up into these previous highs. So that is why that 87.93 area is so important, because on the daily time frame you see that about 2 days ago, no bottom wick, no bottom wick the day before, no bottom wick the day before, no bottom wick the day before that. But we start to see that about 2 days ago, we also had no top wick, so we didn't really leave a range for the next candle to come back and fill. Yesterday, we had a nice bottom wick rejection, but it closed almost weak bullish, not so much of that momentum. The current daily candle, there's only about 8 hours left. So for the last, couple of basically 16 hours at this point, there's really no clear direction. There's no clear volume. We're just rejecting off of the same exact highs as the previous one. So that is why we're going to wait for that high to be broken first. If that is broken, then our next area of target is going to be up top here. If you hop back up to the weekly time frame, that is the resistance area up top there. that we're basically targeting if price can continue pushing back up bullish. If not, there's actually a higher probability that price is actually going to end up rejecting off of this resistance here, or maybe push a little bit higher just to create a top wick like it did here in the past. And then we're going to look for price to break its own daily low, and then as it continues to push back down, we can potentially look for sells to the downside. On the 4-hour time frame, you start to see that consolidation, which tells you that the market doesn't have enough momentum to push right now. It's building that momentum. Anytime price breaks out of consolidation, there's a lot of momentum. So that's why you don't trade in the consolidation. You wait for price to break out of that consolidation, continue pushing down. The easiest trade that you're going to take is down to $83 and about 15 cents for silver. If price continues breaking below that, you're just looking for break and retest formations, some retracements, lower highs and lower low formation to bring you all the way down to the $80 mark, or 79.39. Sounds good?
Yep.
Yeah, thanks.
Awesome. Let's go over to GBP USD. So we have analyzed these pairs. Just make sure that if you're trading them, that you keep watching them. I want to make sure that we're getting through as many pairs as possible that you guys are trading here, at least on Zoom. And then if anyone on YouTube has anything that they want to get analyzed, we can do that as well. Like I said, if you just joined, then I have to hop off real quick for about a 15-minute meeting that came up very last minute, around in about 7 minutes or so. But then we will restart the session again around 7:15 a.m. So in about 45 minutes, we're going to restart the session, and we'll see if there's going to be any potential moves there. For you guys on Zoom, it's going to be the same exact link. On YouTube, obviously just come back to the same exact channel. Alright, GBP USD, top wick rejection this week already. Actually, I'm going to keep it at 1.365. That bottom wick rejection, which is sitting perfectly at these previous resistance and consolidation support areas. Come over to the daily time frame. We had our core consolidation right up top there. Now we're tapping into this daily support consolidation areas. This is an area that we want to watch out for, because this is where you get the higher probability of price just tapping into this consolidation areas, kind of just wicking right below the support, just for retracements. For any potential sell opportunities, we're going to drop down to the 4-hour time frame. So right here, we've seen massive consolidation to the left. We saw consolidation here again before break and retest formation for that 100 pip move to the upside for about 92 pips. But from the zone, it's about 103 pips. Continuation. Price rejected right off that area. A lot of consolidation right in between. Hence the consolidation that we see on the daily time frame right at that level. Then price pushed back down again during Monday, right when the news started coming out about Trump basically saying that Iran's proposal was garbage and all that stuff. Then you start to see consolidation right below this area for the next couple of days leading up to today. And then you finally get that push down here. Price is holding on to a support right into this area. So what you can do is actually just extend that down a little bit more, because we're not going to be trading in this range anyways. This is a range for about 50 pips. I know it does look tempting, but for major pairs like this, personally, I rather use them for swing trading opportunities, and then use minor pairs, equities, and commodities for scalping. It just gives me a better return. So in this case, I'm going to wait for price to break below this and continue pushing, give me a break and retest formation, tell me that there's enough volume for GBP USD basically to drop. The way that it's going to happen from a fundamental perspective is we need more dollar strength and then a continuation down. On higher time frames, if price is consolidating, then you can pretty much just rest assured that there's going to be a ton of volume whenever price does break out of consolidation. So that's what we're going to wait for. Drop down to the 1-hour time frame, and it's the same exact thing. So if I see consolidation on the daily, the 4-hour, and the 1-hour, there's really no point of dropping down to even lower time frames, given that we're not even going to look for an entry for this pair here specifically. So it makes sense what we're doing with GBP/USD.
Yeah, makes
Perfect.
sense.
Perfect.
Yes.
Euro USD is the same exact thing. So you know these are your zones here. Not much has changed there, and we can update GBP/JPY. Again, if you want me to go over another specific analysis, please let me know. So 212.3, that is the weekly support. That's where the candle opened up. No bottom wick whatsoever. We did end up creating a top wick here at 214.4. Drop down to the daily time frame. Daily time frame is also consolidating here. What we're going to do is drop down to the 4-hour time frame and narrow in our zone. See where the core consolidation is, which in this case is this right here. Core consolidation in the sense that we're trying to narrow in any zones where you see most of the consolidation, and then whenever price breaks out of it, there's some volume that you can take advantage of. In this case, this was current support, previous support, resistance. Right below that resistance you had consolidation down here. Look to the left, and then that is also resistance, and then you have your consolidation down here. This is a range of about 63 pips. So if you're looking for a quick scalp, you would just wait for price to break below this, because as soon as it breaks below it, it's kind of a no-brainer trade to come down into 212.3. No-brainer in the sense that we have enough data points here to tell us that if it does break below it, it doesn't really go anywhere but down into 212.3. If anything, just a little bit lower than that. If it continues to hold on to this area as support, this 4-hour time frame, also no bottom wick whatsoever. Drop down to lower time frames. You wait for an established support here. Wait for price to continue pushing back up bullish. Overall, we have a range of about 135 pips. I'm going to narrow in this area here a bit more too. Clean move for about 30 pips, and then a continuation for about 102 pips. Drop down to the 30-minute time frame, and here on the 30-minute time frame, you see a lot more consolidation. So that's why we've highlighted this zone here as well. What I want to see happening here, if I'm going to look for any buy opportunities on GBP/JPY, is price pushing back up. Give me a break and retest formation right above this area, and then continue pushing. Take some partials here, let the rest of the trade run up into 214.4. As it continues to give you those higher highs and higher low formations, you can scale in. But other than that, I would not be looking for a trade right in the middle here. So no trade here, sells below this, and that's pretty much it. Any questions?
All good, thank you.
Awesome. I have to hop off now, but I will see you guys back on the same exact link, the same exact channel in about 30 minutes.
Perfect.